Hello guys, and welcome to this video on how to move your UK business to Dubai in 2026 and how to pay 0% tax or as close to 0% tax. We're going to go through all that in this video so you have a better understanding of who pays tax, who doesn't, what the threshold is, and so on. Okay, so if you're a UK-based business owner looking to relocate to Dubai and pay 0% in tax, then this video is for you. So in the next 20 minutes, I'm going to show you how exactly you can do this properly, covering everything from setting up the company, the residency, exiting the UK properly, which is the critical thing that most people make mistakes with. And this video is going to show you everything that you need to know to exit the UK properly. So who am I? My name is Tom Watson. I ran a 7-figure affiliate marketing business for 10 years. I moved to Dubai in 2021 to escape the UK tax system and to have a better life. Now, you probably already know this, but if you don't, here's why Dubai makes sense. 0% personal income tax. There's no income tax on salaries, dividends, or distributions, and it also accounts for capital gains and income from property in Dubai. Now, there's 0 to 9% corporate tax for businesses. However, the effective rate is often under 6%. It's perfect for online business owners such as e-commerce business owners, Amazon sellers, coaches, consultants, creators, agencies, freelancers. Basically, if you sell something online and you can be a digital nomad, then Dubai makes sense. But the common mistakes most people make are they think they can live in the UK whilst having a 0% tax company in the UAE, and this video is going to show you why you can't do that. They think you can claim to be a non-resident in the UK just because you're outside of the country. Let's say you're going on 2 6-month holidays a year, you're darting around South Asia. If you've just left the UK and done that, you're not 0%, and then this video is going to show you why, okay? So you're also probably assuming that HMRC can't see foreign companies and foreign bank accounts. They absolutely can, and again, I'll get into that. And the common mistake people make is thinking that their accountant is always correct about international tax law. Most of the time, they're completely wrong. They understand UK tax law for small businesses and don't understand what it takes to exit the UK system and to understand international tax law when it comes to paying 0%. So to leave the UK and set up in Dubai and the UAE overall, it has to be done properly, okay? So here's the step-by-step process that we're going to go through on how to set up your company and your residency, and we're going to cover that in this video. So step 1 is understanding company structures and jurisdictions. Now, you'll need to start your company in a free zone or mainland jurisdiction, okay? Most people don't use mainland. It's 99% of the time a free zone. And when it comes to those free zones, there is a load of them that you have access to, okay? These are special zones in the UAE which you can open up a company, okay? It's not like Companies House where you just go there. These are different sub-entities of the UAE's corporate structure. So we have IFSA, Shams, Meydan, RAC, DMCC, JAFSA, DSO. These are all independent zones where you can incorporate your company to do business, and each free zone has rules on what you can and can't do. So we'll show you all that anyway, okay? So they all fall under UAE tax law and are considered UAE companies, but with special jurisdictions and unique propositions. So they are separate and they're for different types of businesses. Now, you'll need to know what is the best type of free zone for your type of business, as they are designed for different types. Now, since December 2020, you can have 100% foreign ownership. Now, before that, it was 49 to 51% Emirati. So in Emirati, we're doing 51%, you were doing 49%, and as of December the 1st, 2020, that has changed, as you can see here, okay? And these zones are determined whether you're allowed to have an office or not when it comes to the free zones. Now, most business owners that we work with, they work from home, so this doesn't really need to be considered. But if you want to have an office, then this is something that does come into play. So step 2 is setting up the company. Now, you're going to need to set up this company in the UAE, and this step can be done whilst you're outside of the country. So you're living in the UK or wherever you are, and you want to set up your company, this can be done. You're going to need a simple business plan, and that's needed, and you'll need to submit the activities which your business will do, similar to the SIC code on a UK limited company. So you're just saying what the business activity is and what you plan to do, okay? So when it comes to that, you're going to need to pay the government fees, and once this is completed, you're going to get a trade license, which is similar to the incorporation document you get with HMRC. So this is like the ID of the company. It has the name, the company ID, which is the company number, your activities, shareholders, your business address, which is a flexi desk. And a flexi desk is basically the most minimal office allocation that a free zone provides, so the company meets legal requirements without needing a physical office, okay? So this will come with the business license, but on paper you need an office, and it comes with that, okay? Rather than a big physical office that you just don't need. Step 3 is getting residency. So you will need to be sponsored by a company to be a resident of the UAE. And as you're a business owner, you will create your company and you'll sponsor yourself. So you're still sponsored, but you've created the company that sponsored you. And you can do that as the owner or as an employee, however you wish to do it. There is some different options, okay? So to do this, you're going to have to supply all the original ID documents from your home country. So passport and recently taken photos for the ID. You can take these on your phone, or these can be just passport photos. Getting passport photos is always going to be the best because they're approved and they use the right frameworks to take the photo. You'll then need to do the blood test, which checks for HIV and hepatitis B. So there's some medical and biometrics. So you've got the blood test, you have the chest X-ray, which checks for active tuberculosis, and then you have the biometrics. Okay, the biometrics are like the last part to getting your Emirates ID. So it's going to be fingerprint scan, palm scan, facial capture, and then your EID and visa will be issued, and you'll be a resident of the UAE. Now, it's important to note, just because you have this doesn't make you a tax resident of the UAE yet, but you have your residency, which is the main key thing you need to exit the UK system. Okay. Once you have this set up, you can go for banking. Now, once you have the Emirates ID, you're going to use this for all the services. Banking, government, when you enter a building, it's basically going to be like a passport ID blend, and it's going to have the power of the passport, but use your ID to go into government services, okay? Now, you can open both a business and a personal bank account using this. Now, when it comes to banking, there is loads of banks in the UAE, like Mashreq, Emirates NBD. These big high street banks do exist, but most people just go for the new digital bank, which is similar to Monzo and Revolut, which is called Wio Bank. And they're backed by a big Abu Dhabi bank, a big high street bank, so they're perfectly safe, and pretty much everyone that we work with uses them. So to open your personal bank account, you're going to need your Emirates ID, you're going to put in all the details, you're going to scan it on both sides, and then you're going to verify your face on the app, and it's fully digital. You should be open in a day or two, and this is how you get the personal one. You will need address proof, which you will get once you get a tenancy contract once you move in, but I believe you can still, at this point, get this without the address, and you can just upload the address later. So obviously you need the bank to pay your tenancy contract, so you can get the bank account and then upload the tenancy contract once you have your new place of residence. So when it comes to opening a business bank account, this is a little different. You're going to need your Emirates ID and the same process for verification online. This is also needed. You're going to need your trade license, which you'll get once the company is open. You're going to need memorandum of association, which is basically a document that explains that you are the shareholder, or if there's multiple shareholders, it will explain the ownership structure, like what percentage you own and so on. You're going to need the address, which is you'll get, and that's your tenancy contract. Again, the same applies with the 90 days. And you're going to need your Ajari. And the Ajari is just a document registered with the government to say that you have access to live in a property. It's just the official authentication of renting a property on top of the tenancy contract, okay? Now, when it comes to bank accounts, most people, especially from the UK, are going to be used to UK banking, which is very advanced. And we can do a lot of our UK banking when it comes to Revolut. The banks over here are a little bit different. So when it comes to a personal bank account, you're going to have 4 major currencies. You can have AED, which is the local currency, GBP, USD, and Euro. Now, with a personal bank account, you can spend relative to the currency. So if you have funds in GBP, then you can spend on that, and it's going to come out of the GBP account, okay? If you use the business account, spending always comes out of the AED portion. So if you get paid in dollars, which we can set this up for you, if you want a payment processor with dollars, that can be done. You would have to then convert that into dirhams. This is just something to note. Just something I've noticed with the banking over here. So here's the main part when it comes to exiting the UK tax system, okay? You need to prove residence in a new country, and here's what you're going to need. You're going to need to notify HMRC within 30 days that you've left the UK, and you can prove this via the ID documents you get in the UAE. It can be 1, 2, or all of these, okay? Show flight history leaving the UK. So your flight leaving the UK to go to Dubai, you're going to need that. You can just get the PDF document of that and store it. That's fine. Scan the copies of your Emirates ID and to submit the P85 document, which is basically a document that tells HMRC that you've left UK and you no longer plan to be a tax resident. And by sending these other documents, you're reconfirming that you actually have residence somewhere else, because you can't leave the UK and you can't send this document without having residence somewhere else. If you send this without the proof of residence in another country, then it will not get approved, basically. So you need these documents to really switch over your residency and tell HMRC that you're now living in Dubai and you won't be a tax resident of the UK. Now, when it comes to tax residency, you will need to do a minimum of 90 days in the UAE. After that, you can feel free to travel as much as you like, but you have to do a minimum of 90 days, which is pretty lenient. A lot of places, especially tax havens, are like minimum 6 months. For Americans, it's Puerto Rico 6 months, Monaco 6 months. So actually, it's very lenient, and Dubai is a great place to travel. So it makes complete sense to just do the 90 days and so on. A lot of people here are going to just be planning to move fully, which is fine. But for those of you who just want a base and want to get 0% tax and travel, this is what you need to do. Okay, so when it comes to leaving the UK, there are some common misconceptions, okay? Here's what you need to know. Most people think that they can just live in the UK, open a UAE, well, a Dubai company, and you get 0% tax. And that's not quite how it works. And here's why, okay? So we have controlled foreign companies and tax avoidance. This is a government document, which is under here, under the internal tax section. So in 1984, the UK introduced CFC rules. So CFC is controlled foreign company rules, okay? What are these? So CFC rules is to see and determine where the company is actually being controlled from. So the example here is that I've put, if you're one shareholder of the company and it's based in the UAE, or this could be another tax-free jurisdiction, but you live in the UK, the HMRC will deem it's being controlled from the UK where you physically are. And this is going to be based off the fact that there's one shareholder and you're controlling everything. If you're a freelancer and you're doing it, you're the only person, you must be the only person who controls the company. And if you are then doing this in the UK, you would then be subject to 40 to 50% tax. It would count as full income tax. So if a UK person controls a foreign company, that company being a low tax jurisdiction, HMRC will claim tax on those companies' profits, and all of the profits would then be subject to that 40 to 50%, rather than the 20 to 25% that you would typically have. And most people who have money in their companies can't withdraw it because of the high income tax. You would get shafted if you did this, which is why people are moving to Dubai, because it's a much freer economy. You can move your money around. You don't get taxed for taking it all personally. And most people just move there to take their new earnings and pay 0% tax, okay? There is some small exceptions to this. Let's say you're a big multinational corporation and you have an office in Dubai and all your staff there and they are managing it and you're not actually doing the physical work and you're the key man removed from the company, then this is a whole different setup entirely. But that's just a note to how, if you've ever seen someone living in the UK with a company abroad, that's typically how it works, okay? And people say, well, I just won't tell the UK that I have a company in the UAE. Well, this doesn't work because of one thing called CRS, which is Common Reporting Standard. CRS is an international information sharing system created by the OECD, which basically requires banks all around the world to report financial information about their account holders in their home tax authorities, okay? And obviously when you upload your bank, you then ask for a passport and they can see that you're a UK citizen. So if you live in the UK and you open a bank account in Dubai, the UAE bank is legally required to tell HMRC about it. Chances of that happening can be pretty low, but this is in place to avoid that. And so it's not like you can just be negligent to it and it's going to be fine. This is in place for people doing that. People have been wanting to not pay tax for years. Moving to Dubai is the best legal alternative that exists right now. We're in a very lucky position where Dubai is a great place to live and it's 0% tax. So this is the easiest way to do it. I've looked at all of the options before I moved to Dubai, and the easiest way was just to move to Dubai. So here's another one that people also ask: how long can I stay in the UK? Now, this entirely depends. It's based on the financial years, April 6th to April 5th. Now, based on that time frame, you have something called the SRT, so Statutory Residence Test, which basically determines how many ties you have that you can stay in the UK. And ties are made up of certain things. So you have a family tie, so a spouse or long-term partner in the UK, children in the UK if you've got a family there. If you're moving to the UAE and your family are still in the UK, this is considered a tie. You have an accommodation tie, so you have a property you own or rent. And even if you have access to a property that maybe is families, this can still count as an accommodation tie, which is why it's so hard to go past the days allowance that you have, because you have a British passport, you have the family tie, and you have the accommodation tie. Now, the work tie is very different because you can just not work in the UK and that's totally fine. No one's ever going to question the work because you're mostly an online business and you maybe have followers or whatever, and people come in without you physically working. So this one is very different. You also have the 90-day tie, okay? So if you've been in the UK for 90 days plus in the last 2 tax years, which you will have been if you're considering moving to Dubai from the UK because you'd have been living there, this is a tie. So these ties add up and you can basically spend a certain amount of time in the UK based on these ties, up or down depending, okay? So for most people, they've spent those 90 days plus in the last 2 years. If you've lived there, like I say, it's automatic. You have that accommodation tie, you have that family tie, and this ties test is used to calculate how someone can become a tax resident of the UK, but you have to flip it to remove yourself as being a tax resident. So if a tourist is in the UK and they have they go over like 180 days, then they become a tax resident. Now we just flip this around to avoid becoming a tax resident in the UK as we're planning on leaving. So here's a little example. You're moving to Dubai in July 2025. You keep your UK house and you rent it out later, or if it's a rental and you leave it empty, this is in the same scenario, okay? Your wife and kids move to Dubai with you, and you were a UK resident for the past 5 years, and you work online but won't work any days in the UK. Okay, now these count as 2 ties, as you can see, the accommodation and 90-day tie, and if your family move with you, it counts as 2. Now, if you have 2 ties, your days in the UK are a maximum of 90 days. This is basically going to be the standard for everyone watching this video. If you're an online business owner, if you're like a single guy looking to move, you're basically going to be on 90 days. Now, having more than 90 days is pretty much non-existent because you've lived there for all that time. If you were to spend, like, say, 5 years and never enter the UK, then you would be able to creep that over into like 120 days. This isn't going to be the case. Most people are going to want to go back to the UK for a certain amount of time to see their family. So you're stuck at 90 days. Here's a little graph, table to show you how many days you can have. So if you have 4 ties, you can spend 15 days in the UK. If you have 3 ties, you can basically spend up to 45 days. If you have 2 ties, you can spend up to 90 days, as you can see here. And if you've literally got 0 ties, your maximum is 6 months. But most people aren't going to fall under this. You're going to fall from here upwards, okay? So like I said in the earlier portion of this video, do you need to be in Dubai to open up the company? And the answer is no, but you will need to come and do the biometrics, medical, and Emirates ID collection. Now, you can do the company remotely, and when it's time to do the medical, biometrics, and so on, you can come into the country, do a status change, and then you can file all that, get all that done. So the main portion of it is just done outside the country. You come in, you do it, and it's done super, super quickly. Now, the other question that we also get is, do I need a physical office in Dubai? Again, no. You get a flexi desk which satisfies the legal requirement anyway. So, I mean, if you want an actual office, you can have one. These are dependent on the certain areas of your free zone or where you're incorporated, but you don't need a desk and you don't need a office. So you can just use the flexi desk and just be completely remote. These free zones are set up to accommodate these types of businesses because agency owners that work remote or e-com guys don't need an office. Here's another common question I also get. Can I keep my UK bank accounts? Now, a lot of people think that you can't keep the UK bank accounts and that if you move money, once you're a tax resident of the UAE, if you move money into the UK bank account, you're going to get stung and taxed. That's not the case. So your tax status is based on your physical presence and residence. Using a UK bank account makes zero difference. You can get a bank account in the US, the UK, the UAE. It doesn't matter where your bank account is. It matters where you are and where you spend most of your days, okay? So if you want to continue using your UK bank account, you can. Probably wouldn't recommend it. Just use the UAE ones. It takes a while to shift over to seeing everything in dirhams versus pounds, but you can just use that bank account, no worries. And the other question we get is, do I pay UK tax on money earned from UK clients whilst living in Dubai? And the answer to that is no. As long as you're the UAE tax resident and you use a UAE company, then you're not going to pay any tax. You will invoice your clients into that bank account or that payment processor that's linked to the company, and you wouldn't pay any tax. Now, a lot of people want to know about payment processors. There is tons of options, a lot more in the last year or two. There's been a lot more options. Before, they were a bit rocky. When I moved back in 2021, Stripe was just set up there. So there is Stripe and there is some other options. There's starting to become more and more that do multi-currency, but we can help you with that if you want help with that. That's no problem at all. If you want to get this process done quickly, you can click down below, book a call. There'll be a link in the description. Click that. If you've got any questions, just hit me up on WhatsApp. I'll be able to help you with this process. So if you've got any questions, shoot me a DM or book a call. I look forward to speaking with you soon.